particular trade that happened. Now, this I need to explain now. There are two ways that you can take a trade. Now, this is for buy only, okay? B-U-Y. Now, this is what we call a choc, right? C-H-O-C. Now, if we have a very strong impulsive move breaking this choc, this is one way I'll be looking for a retracement to the 50% level. Okay, this is one. Now, there will be another situation where we have this, right? And then what happens next is that we have price breaking, but it did not come back to the 50%. It came down. Oh, let me do it this way. Oh, it came down. It did not come to 50%. It moved higher. Now, in this situation where you have the first wave, second wave, third wave, I do expect sometimes that the market could actually come back to create one more wave before going up. So at this area, you can do your 50% entry. Okay, now where do you actually want to take your 50% entry? So you can actually take it, measure from here to here. This is one. This is what I call a bit risky kind of measurement. And the second measurement, you can actually take from here and here. So your 50 will be a bit lower. So you have to make a decision. If you're measuring from here to here, then I'll put the stop loss right here. But if you're measuring from here to here, then I'll put the stop loss right here. Now in this entry right over here, what I did was that you can see impulse, correction, and then another impulsive move breaking. But the first impulsive move has already did a choc, see, change of character. Now, the moment price broke here, we have a break of structure. So what I did was that I measured here and I put my stop loss just below here. This was my fit, right? And I did a 50% entry. So what happened next was that the market gave me a 1-to-1 and then it took me up right after that. Okay, so this was one trade that I took. But the key point in all this is that you need this kind of price action. Without this kind of price action, don't enter. Okay, so like I said, you focus on the entry, let me focus on where we should look for these patterns, right? There was a second entry later in the day, okay, right here. But I need to admit to you, I didn't take it because I wasn't around. I was at dinner. So what happened was that you can see there was a very impulsive move right over here, right? And then what happened was you had a choc, change of character right here, breaking this thing. So this thing went up, but went up all the way. And so what I did was that you can see 1, 2, 3. So I did a 50% retracement. Not a bit. I mean, if you had taken a 50% retracement, that would have been your entry, a nice entry right there for you. And yeah, I mean, that was the entry. So if you were worried, what happened was that you could have just put your stop loss here and then your target here, and your 50% will be much higher right here. So nevertheless, this one also did not hit your stop loss and just put it up. And that's the reason why you say, look over here. So sometimes, you know, these are the things that you need to decide where you want to put your stop loss and where you want to measure. And sometimes this comes with experience. So just a rule of thumb, let me show you the one before here. Now, look at the stop loss right over here. This stop loss, this is stop loss 1, the lowest stop loss, and this is the highest stop loss. And you can see very well that this is a bit far away and these two areas are a bit near, right? So for me, at the point of time putting here, I felt that, you know, this is a risk that I could take. Now, if you look at this particular one here, your stop loss would have been here, right? At this point. Now, based on hindsight, obviously it's like, oh, okay, not a problem. You know, it didn't hit the stop loss, but it's quite near, to be frank. From your 50%, this 50% here to here, if you were to measure here, that carries some risk. So sometimes you need to make this kind of decisions where you want to put your stop loss. Okay, so that will actually help you to decide, how you want to tackle these particular trades right here. But nevertheless, just to let you know, these are very, very high accuracy kind of trades, especially if it reacts to the levels that is given in the report. Okay, then we have the pound dollar. Now, this one would have created some kind of nervousness if you're looking at it, where you had a very strong moves that created a lot of gaps right over here, and then it broke the swing high right here, creating the change of character. So this would have been your entry, stopping there on basically your trade would not the stopping there right there, and then opening the next day way below over here, and you're going like, oh man, is this trade going to survive? But at the end of the day, almost took you out, only to see price moving, and moving really a lot. Not just like this is your 1-to-1, this is your 2-to-1, this is your 3-to-1, then this is your 4-to-1, and then right up to this top, your 5-to-1 kind of thing trade right here. Okay, so this is another trade that actually happened last week, right? So